let's first talk about the other information. So what is my job? I told you other information is something which accompanies your basic financial statements, but it is not the auditor's baby. It's the management's baby. What is my job? My job is to just read it and then I need to respond appropriate. That means what? If I get to know that whatever documents you are giving along with my basic financial statements, they are not compatible, then there is something which is wrong. Then I need to correct that, because otherwise, if you're mentioning in your highlights that your growth rate is 30%, but your financials are showing it to be only 15%, then people will start doubting the financial statements, right? So either people will doubt the financial highlights or the financial statements. But if they do so for the financial statements, then my job as an auditor goes for a complete loss. So I cannot say that since this is your baby, forget about it, I'm not getting into it. No, I have to get involved. But do I have to audit it like full time? The answer is no, I don't have to audit it full time. Okay. So what is other information? It may be financial, it may be non-financial information, but not financial statements, not the audit report. That is included in the entity's annual report. Typical examples are ratios, highlights, employment data, officers' remuneration, RS. All of these would be other information. What is not other information? RSI is not other information. Any kind of a press release that we're talking about, that's not other information. The cover letter which accompanies the document that contains the financial statements, it is again not other information. So first thing is, what is other information? Anything that accompanies basic financial statements, but not your cover letter, not your press releases, and not something which is put in other sites. That becomes your OI. So what is my job as far as the OI is concerned? Now see, my job, before I go to my process, I need you to understand that what is inconsistency. Inconsistency means something is not tallying. The data that I've given in the financial statements are not tallying with the highlights or the ratios that you've spoken about. So if they're inconsistent, they may raise a doubt about the auditor's computation. So if there's something wrong about, the person is getting the same set of accounts and he's getting some highlights in between. And then when he sees that, he might start questioning the authenticity of the audit report. What is okay? One thing is very, very clear, guys. We're going to just concentrate on the facts. So there is an MD&A analysis where or the highlights which speaks about, I have a gut feel that we're going to go very big in future. That's an opinion. And for an opinion, as an auditor, I can't do anything about it. Just because I don't agree to you, it does not mean that I have to stop you from saying whatever you want to tell your shareholders. But if there is a misstatement of facts, okay, which is appearing in the financial statements, then I need to be careful, because that is something that might undermine the credibility of my report. So I will have to step in and let the users know that what you're communicating to the users is incorrect. So what is my role as an auditor? My first job is to read whatever is going with the full set of annual financial statements. I need to first read it. And then I need to find out if there are any material. Please remember, I'm not going to consider something which is immaterial and important enough area for me. But if there is a material inconsistency, then I need to figure out where is the problem and what is the problem. Is it that they've written something which is incorrect? Or is it that there is some fact that you're talking about, which is not related to typically the financial statements? So there is something which you've spoken about, not directly related to the financial statements, but it is a misrepresentation. And you have come up with that information in the full set of data, which is accompanying your basic financial statements. So what do you do with the material inconsistencies? See, if I'm able to find out all of those inconsistencies before the audit report has been released, then what do? I go and find out that, see, where is the problem? I go and tell the management that you please fix that problem. So it's either the financial statements which is incorrect, or it is the other information which is incorrect. Either, if I go by my earlier example, either you have stated a 30% CAGR in the last 2 years is incorrect, or I have made some mistake in quoting the financial figures in my financial statements. I understand where is the problem. And if the management refuses to make the correction, so let's say I go at the other information and I then go and find out that no, your financials are incorrect. You should have restated them. Management says, I'm not ready to do that. If management says that, and if you end up giving a wrong financial statement to the users, I have the authority to modify my opinion. Because if it is not, if your financial statements are misstated, then I still have a chance to modify my opinion, either an adverse opinion or a qualified opinion. But what if there is something wrong with the financial highlights? My financial statements are very correctly giving you 15% growth figures, but your highlights are showing a 30% CAGR, which I feel is incorrect. What do? I first go a step above the manager. I tell those charged with governance, which is typically audit committee in most big companies. I go and tell them that, see, this is the problem. You're showing a financial highlight and it is not consistent with the financial statements. I've asked the management to change it. Management has not agreed. What do? I let that people. Now, see, if you recall in one of the first class, when I told you the format of the report, right, guys? It was here, if I'm not wrong. You remember here, this slide? There is a specific section called other information section, right? Similarly, you will have a separate section for supplementary information or required supplementary information in a separate category. So let's say there's something wrong with the other information section. My financial statements are correct. I tell the management that you need to change it. Management disagrees with me, does not change it. But I still now know that the other information is going along with my audited set of financial statements. And I don't want the users to doubt my financial statements as a result of that anomaly. So what do? I first go to those charged with governance. Then what I do, I tell them, let's see, this is happening. Now, what is the next step that I can do to prevent it? Then what I do, I describe that error, that area where it is wrong. So I let my financial statement users know through my audit report where in the other information section, I tell them that, see, the CAGR here is 30%, which is incorrect because according to our information, it should have been 15%. Or if I feel that the client is not even agreeing to that, I will not give them the audit report and I will withdraw the engagement. If the client does not agree even to the changes in the audit report, I will not give them a report and I will withdraw the engagement. But what if the data comes to your knowledge after the report has been issued? So I saw just after the report release date that there's an anomaly in your other information. If management agrees, just agree and see whether everything is correct. If the management does not agree and after the report has been released, you realize that there is some error in the other information section, you please inform those charged with governance and you take a legal advice that what is your responsibility now and what is your liability. So take legal advice. What if there's some material misstatement of fact which is unrelated to matters appearing in the audited financial statements? So my financial statements are correct, but there's some other information that is appearing with the financial statement set, which is incorrectly stated. And it's a fact. The company has signed a big deal with the government agency and that deal does not exist. So what happens with that? I will first go and request the management to consult with the entity's legal counsel. You've ended up saying something which is not correct. But if the management refuses to correct that material misstatement of fact, I will go and inform those charged with governance, typically one level above the management. Okay, so see, all of this is very easy, guys. Once you understand that this is particular data is other information, this entire thing will come popping in your brain. You don't have to think much about it. What is other information? Something that goes with your financial statements. Not my job, but I will just read it and find out if there's anomalies. If there is, and there is still a chance to change it, I will go and tell the management. And if the management refuses, I'm going to go and consult it with those charged with governance. If the financial statement needs to be changed, which hasn't been done, I will modify my audit report. Okay. So, what was the name of that report? Report 23. Yeah, 1 second. Just have a look at just have a look at how the report would be worded. See this. This is that specific other information section for a non-issuer. which clearly says that management, are you able to see this? See, management is responsible for the other information included in the report. So I've mentioned, where do I mention it? As a separate para. Where is the separate para? There's a separate section in my annual report for the audit report. I'm going to use that. I'm going to head it appropriately as other information. And then I'm going to use these words that management is responsible for that part, but it does not include the financial statements and our auditor's report thereon. Our opinion in the financial statements do not cover the other information, and we do not express an opinion or any form of assurance thereon. We are not supposed to do the audit of this. In connection with our audit, our job is to read the other information and consider whether a material inconsistency exists between the other information in the financial statements or the other information appears to be materially misstated. If, based on the work performed, we conclude that an uncorrected material misstatement of other information exists, please mark the keyword as uncorrected. We are required to describe it in our report. So can I do away with my responsibility? The answer is no. I will read it. If there are inconsistency, I will have to mention it in my audit report. Where? Separate section under the heading other information. Is this clear? Any questions? Anybody? Okay, so read, report inconsistency, if any. That's it. Now we go to supplemental information in relation to financial statements taken as a whole. I'm going to refer to them as SI. What is my job? General rule, I'm not responsible for it. But if the client approaches me and gives me a specific engagement for that, then I will have to I have to express an opinion. What am I supposed to do? I'm going to evaluate the presentation of the supplemental information in relation to financial statements as a whole. And then I'm going to express an opinion whether that information is fairly stated in all material respects in relation to financial statements as a whole. So I take the full financial statements, I've done the audit for that. You give me a specific engagement for a particular supplemental information. I drill down and I see that yes, this is fairly stated with respect to financial statements as a whole. So what is supplemental information? It is the information presented outside the basic financial statement. So this is not the information that you're going to get in the income statement, balance sheet, notes, or cash flows. It is outside that, but they're presented the document containing the audited financial statements or the separate. So either you can put it there as a schedule or you can separate it separately. For example, summary is extracted from financial statements. For instance, if I give you a very detailed drill down of the details of other income or general and admin expenses, okay? All of that is when there is a supplemental information, but it is inclusive in the financial statements audit report. But you can also have some statistical data that I'm presenting, which is in relation to financials as a whole and in the document which contains the full set of financial statements. In that job, what am I doing? Now, see if this becomes very important. See, first of all, the information that you're asking me, fixed assets drill down or other income drill down or general and admin expenses drill down. Ideally, this is not something that I should have given you in the normal course of audit. But since you're asking me for it, it has to come in directly from my financial statement. So it is one of those columns that I'm using in my financial statement, which you are drilling down. So there must have been a direct correlation between what I'm producing on the financial statements and presenting it and the drill down of that thereafter. It should relate to the same period as the financial statements and must be audited by the same auditor. And the auditor must have issued the auditor's report. Also, very importantly, please understand, I should not have given you an extreme form of opinion. So neither an adverse nor a disclaimer of opinion should have been given. And The supplementary information will accompany the audited financial statements, or so either when you're giving an annual accounts to the shareholders, it's a part of it, or you have released it in your website so that everybody can say that it is now available to be issued to the shareholders. So the shareholders don't have to do anything separate to get the accounts. I just have to log into the website and get the access of annual accounts. So if all of that happens, then only I can take an assignment for supplemental information in relation to financial statements as a whole, not otherwise. So what is my job? My job is now this is becoming like an audit because you've engaged me as a separate assignment. What will I do? I will use the same materiality thresholds as what I used in audit. I will conduct inquiries, find out whether whatever criteria you've given me, it is abiding by that, understand how did you prepare that, and then I will reconcile the statements to the financial statements that I have audited. uh, this is easy, right? It's like a full-blown audit. Please remember, you need to do the you get the management representation letter, which should say that, see, it is my job and I've given the auditor to do this and express an opinion. Last, very important. For this information, there is no requirement on my part to do the subsequent events procedure. I'm not supposed to do it for the supplemental information. How do I report? Where do I report it? Again, for non-issuers and issuers, it's separate. For non-issuers, just like I have a separate section for other information, for non-issuers, I will have a separate section titled supplementary information. And if there is something wrong in the supplemental information, then I have a separate area. I'm giving you an assurance. I will modify that a bit. Maybe qualified, maybe adverse. If there's a separate report, so if this supplemental information is actually not supposed to accompany my basic set of financial statements, there's a separate report for that. I'm going to hold the use of that report. If qualified on financial statements, now let's say if I've qualified my financial statements saying that my general and admin expenses I'm not able to confirm. How is it? Because it's very huge and you've not been able to substantiate it. If I've qualified that my opinion because of the general and admin expenses. And now when you want me to give an opinion on the general and admin expenses only, so that will also be a qualified opinion. You cannot have a clean opinion on one, where you cannot have a qualified opinion of the financial statements. And if the object of qualification is what for which you wanting the supplemental information, I cannot conflict. Okay, please remember, in extreme situations, if I'm giving you an adverse or a disclaimer of opinion on my main set, I cannot give you any separate opinion on the supplemental information. So no such assignment is possible if the auditor has given an extreme opinion on the main set of financial statements. For the issuers, it's easy. Now see, I want you to understand the delta between the two guys. Okay, this is important. This is important. So where do you mention it in the issuers? In the explanatory paragraph or in a separate report, the way the auditor would and the client would want. If there's something majorly wrong in the supplemental information, please modify the opinion. Maybe a qualified or an adverse opinion, because it's like a separate audit assignment. So if it's not abiding by the criteria or it's not going by the what you've stated in the financial statements, and if there's something wrong in the supplemental information, you can qualify it or you can give an adverse opinion. Again, same thing, if you've qualified your opinion on the main set of financial statements and the reason for qualification is applicable on the supplemental information as well, then you're going to determine the qualification for that, either qualified or adverse. Okay, this is very important. For issuers, I can take a separate assignment, but if I'm giving you an adverse opinion on the main set, I have to give you an adverse opinion on the SI too. And if I'm disclaiming my opinion on the main set, I have to disclaim my opinion on the supplemental information too. Now see guys, every line in the slide is important. Why? Because I can get a MCQ, I can get a very tiny MCQ from any of these areas. So actually what I have tried to do is I've tried to sum up and put something in an order which is visual, but every line of these slides are important. I have put in a lot of efforts to produce this, and I hope it will help you guys, because these areas are very simple areas. Once you understand these, so the hows are very, very easy. The only trick is to put it in the silo. OI, SI, RSI. OI, read, if inconsistent, report. SI, like a proper audit assignment, not allowed for non-issuers if there's an extreme opinion on the financial statements as a whole. For issuers, if it's an extreme opinion, that has to mirror in the report on SI as well. Where do you report it? For non-issuers, a separate section called the supplementary information in relation to financial statements as a whole. For issuers, in the explanatory para. That's it. Uh, yeah. Okay. I will show you one report. One second. Let's show you 24. See, this is supplemental in relation to financial statements as a whole. Do you see B's? Be careful about these headings. A separate para, right? So a separate section. Do you see this? Which is titled supplementary information. And what is it that I will write? Our audit was conducted for the purpose of forming the opinion on financial statements as a whole. This accompanying supplement. So this schedule of fixed set is presented for purposes of additional analysis and not a required part of the financial statement. So since my client is choosing to do this, I'm giving an opinion on this. This is not what I generally cover in my annual audits. Such information is a responsibility of management and was derived from and relates directly to the underlying accounting and other records which were used to prepare the financial statements. The information has been subjected to auditing procedures applied in the audit of the financial statements and certain additional procedures, including what? Comparing, reconciling such information directly to the underlying accounting and other records, which was used to prepare the financial statements or the financial statements themselves, and other additional procedures in accordance with auditing standards generally accepted in the United States of America. Please understand that this is very important. In our opinions, I'm giving you an opinion. The information is fairly stated in all material respects in relation to financial statements as a whole. So where do you give it? Supplementary information. What is it? Let the users know that this is not generally required from me, but since the client requested it, I am subjecting it to the same audit procedures and the same materiality thresholds that I use for conducting the main audit. This is my. Is this clear? Okay, be very careful about these here, right? What happens if there's an extreme opinion? Can I take the assignment? If yes, how do I present the report and so on and so forth? The third one becomes required supplementary information. The best thing is the example, the pension, the budget, all of that schedules, which needs to go the government entities standards. What is RSI? It is information that the designated accounting standard setter has determined must accompany the basic set of financial statements. But this information is outside the part of basic financial statements. So in my examples, it became the GASB standards which have been established by the Government Accountability Office. This is the example that I've already given you, MD&A and budgetary comparison statements for government entities. Another very good example that I came across was this. Let's say if there's a homeowners association, we call them HOAs in America. If there's a homeowners association where, like a cooperative, there are 10 families which come together and they decide to form a cooperative and build up a housing society on base of that. Now, for them, there is a mandatory requirement that you have to give a schedule of the future costs of major repairs of common property. And who wants it? FASB wants it. So for a cooperative which is owning a property together, there's a mandatory requirement to come up with a schedule for the repairs requirement, current and the proposed future. All of that will be required supplementary information. Understand, supplementary information taken as a whole is discretionary, but RSI is a mandatory disclosure. Is it an audit? The answer is no. It's not like a full-blown audit, but is it so somewhere, if I look at, if I look at, there are two extremes. The first extreme is OI. What do? I just read. So it's not majorly my responsible. Read and report inconsistencies, if any. That's it. My only job is to read, and report inconsistencies if applicable. So this is the first level. The next level and the extreme level is for the supplementary information taken as a whole. Now this is a separate assignment, so it's not mandatory. It is not mandatory, and here it's like a full audit. So you have to give an opinion. But somewhere in between. Now, is it mandatory? This is mandatory. The other information is mandatory. Somewhere in between is level 2, which is supplementary information taken with respect to financial statements as a whole. Is it mandatory? The answer is, supplementary information which is required. Is it mandatory? The answer is yes. It is mandatory. What is my job? Is it do nothing, just read and report consistent, or is it to do everything? It is somewhere in between. It's neither nothing nor everything. It is in between, which is apply limited procedure, something similar to a review. What will I do? I will read it and I will say, okay, nothing came to my notice that made me to believe that these are not uh, compiling, or these are in conflict with the data that are presented in basic financial statements. So please remember, this is mandatory, but this isn't. Okay, this isn't. So what is my job? First job is to inquire. Let the people in the company tell me whether the RSI is within the guidelines. What methods did they use to present it, to prepare it? And did any assumption that was used in the preparation of RSI changed with respect to last year? Then what do? I compare this for consistency with the basic financial statements. I compare it with whatever response management has given me for all the inquiries and all the other audit evidence that I receive. Of course, I will get management representations, letting the users know that RSI is there, baby, and we have complied with the guidelines issued by GOA for the reporting of MD&A, budgetary schedules, pension, and infrastructure. All of that has to be done. So what about the audit report? Report again for non-issuers is required. Supplementary information, there's a section that has to be coming up which says that, okay, this is the statement, it was a management's job to do it. We have applied limited procedures. And also very importantly, the auditor does not express an opinion or provide any assurance. Make it a very mandatory explicit statement in the section which clearly says that it's not our job to express an opinion. So I'm not giving you any assurance. For the issuers, there is no mandatory requirement for RSI. They've told you only if there are certain anomalies that you have noticed are you required to present it in the explanatory para, not a separate section like non-issuers. Two things I want you to understand is that you've got to revise the section when all of the RSI is omitted, because that's a material departure, right? Why? Because see, it's budgetary scheduling or your pension, infrastructure. These are mandatory requirements. So if the client is not given this statement, you have to modify your report accordingly. And second, deficiencies in or omissions of RSI do not affect the opinion on basic financial statements. And the auditor need not present the information if management fails to do so. It is nothing to do with basic financial statements. My financial statements, which are basic, are intact. So when you go to government standards, when you're doing FAR, now it is in the section called BAR, which is one of your discipline criteria. But there you will see that when you're presenting a CAFR report of the government entities, then these procedures are important. But just because that information is incorrect or not there, can I qualify my financial statements? The answer is no.